Hey guys, this is LJK Financial Foundations. I'm Lonnie Cronoli. Great to have you guys here. This is a channel where we take a money 101 approach to talk to you guys about the different fundamentals of finances, helping you build your financial house and get everything in order. Just giving all that advice. In today's video, we're taking the final look at different types of life insurance. If you haven't seen the other two, check those out. But guys, hit the subscribe button and I'll see you in the video. Thanks. Hey guys, welcome. So we have been taking a look at the different types of life insurance. In the first video of the series, we talked about AD&D, how it's not really life insurance, it's just accidental death and dismemberment, how it shouldn't be something that alone that you should have to be covered with, as to have a secure future with. Taking a look at life insurance in general. What is life insurance? Life insurance is a income replacement, guys. If something happens to you, you want to know that your family is going to be taken care of if after you pass away. So you want to know that that income is still going to come in, so that they're not going to lose a house or have to cut back or have to suffer any more things after they've suffered the big loss of you. So that's really what the life insurance is. Again, we took a look at AD&D. It's a good thing for certain types of people. Not going to be as useful for the average everyday people. But guys, that's going to be a good add-on to another type of policy. So we talked about the whole life last week and what that looked like using in the three different rules on that, where you, for the first 3 to 7 years, depending on the policy, may not have any money in your savings. For the second rule on that is you have to borrow your own money and you have to pay a high percentage on it, and you're only getting paid between 1 and 3% on it for you from them on your money. So you're not making much on it, but they're charging you a crap ton on it for you to borrow your money. So that was rule number 2, and it really sucked. And then we go into rule number 3. You have what they sold you on, the cash value, the savings plan, and the insurance. And your family only gets the insurance. They keep the savings plan, the cash value of that. So that's a rough look at the 3 rules that we looked at last week. Just wanted to review those. So this week we're covering term life insurance, which term life insurance is for a period of time, guys. Whether it's 20 years, 30 years, however long that you have it set up for, depending at what age you are, obviously, it's for a fixed amount of time. And if you go past that time, then obviously, if you live past that time, that lapses. So, there's good and bad to that. That's the one thing that I wanted to point out. But guys, this is a whole lot cheaper. It's a whole lot better. And, looking at it, just using an example, I'm going to do a side-by-side comparison. Like last week, I covered the whole life, and I want to do a comparison of the whole life versus the term. And so you can kind of see what that looks like. So over here, side A, we have the whole life, and side B we have the term. So whole life, let's say that you're 30 years old and you want to take out a whole life policy. They tell you it's going to be $100 a month. So using this example, same $100. Last week I was a little bit more conservative with the numbers, but just to make it easy, we'll say $50 goes to your savings, $50 goes to your insurance, just to make it easy. So again, $50 to the savings, $50 to the insurance. The first 2 to 7 years, you're not going to have anything in your savings. 1 to 3% rate of return on it, and at 65, 35 years later, you're going to have about $50,000 saved up in that. So, and then when you pass away, your family is going to get the insurance and not the savings. But you're only going to have $50,000 saved in the savings. Sounds good though, right? And it's going to go your whole life, and it will balloon, and it'll get more expensive as you get older and really look horrible at that point. I told you guys that I was going to tell you my recommendation. Whole life, universal life, thumbs down all the way. This is not good in my view. This is just my view as how it's crippled people, and there's been a lot of promises made of what it was going to do for helping them with the savings and different things with their families and whatnot, and it never comes through. The promises that have been made, until you read that contract and see what's actually in that contract, that's where the promises are. And they may verbally tell you one thing and the contract says another. You're liable by the contract. So if you ever have questions about that, please guys, get your contract out. If you don't understand it, take it to somebody who can understand it. You want to find somebody that's trustworthy in trying to find that. So take it to a professional. They'll help you out with it. I suggest taking it to somebody who sells term life instead of the whole life. They can break down what the disadvantages are, and if they are a good and honest person, they're going to tell you, all right, this is set for you. This is going to be okay for your situation, whatever that situation may look like, or no, it's not. And here's what we can do to give you better. So that's what I would say on that. But now, like I said, in this video, we're talking about term. So same $100 a month, talking about term insurance, 30 years old, till they get to 65. So when we talk about term and invest the difference. $100, okay? And in that $100, $25 is going to be for your term insurance for a $100,000 policy. Both are a $100,000 policy. $50, you're paying $100 for the one with the whole life for the $100,000, $100 a month, which 50 is going to the savings, 50 is going to the insurance. So $100. But with life, you're paying $25, and $75 can go to an investment. Again, guys, I know that I kind of sound like a repeater on this, but my Rule 72 video really goes over on how this kind of stuff can benefit you, how it can help you, and how it can really be much more for you, and how it can help impact your financial future and help you make more money just by where you put your money. So that's very important, guys. So again, $25 in the saving or in the insurance, $75 is going into investments. So again, at this point, from day one, the money is yours. It's all yours. There's the other great thing about this is there's not going to be any kind of penalty for it. And you're going to be getting a better rate of return on it. It's your money. You are getting between 7 to 9, and I'm being conservative on this. 7 to 9%. I'm going to use 9% for this example. But you can get up to 12%, as I talked about in that Rule 72 video, guys. So definitely see a professional if this is something you want to look into. I strongly recommend You know, after you've done your budget, after you've taken care of your short-term emergency fund and taken care of just getting things in order, you want to make sure that you're having money to put into investments so that your family can be taken care of on this stuff. So buy term and invest the difference. We were talking about it's yours from day one. The second one, you're getting 7 to 9%. This is conservative, but 9%. And at that point, you can take your money out. It's your money. You can take it out with no interest on it, guys. You're not going to pay the penalty of what you would with a whole life because it's your money. You don't have to borrow it because it's your money, guys. But at 65, when you're 35 years old, you are going to have just under $223,000 in the savings. And your family is going to get your $100,000 policy and your $223,000 in your savings, guys. Just under it. They are going to get both. Where with the whole life, universal life, they only get one. Buy term and invest the difference, 100% better, guys. This is why your family's getting both. So, guys, that's why it's important to do this. The term is so much better. There's so many experts out there. Dave Ramsey, if you follow him, he's going to tell you buy term and invest the difference. Susie Orman, she's another financial expert out there. Same thing, buy term and invest the difference. It's just cheaper. You know, the term insurance is so much cheaper than the whole life and universal life, and it's so much better for your family. And at that point, you can get the AD&D, the accidental death and dismemberment, as a rider on your policy, an add-on, if you will. And then you're covered in all the different ways. So, guys, that's taking a look at the 3 different types of insurance. And if you have any questions, please leave comments below. You know that I'm willing to answer any of them. And if you need help with any of this, please reach out to me. Glad to help out. And, you know, I'm here for you guys. Leave comments if you have any questions about any of these types of insurance. And I'll do my best to answer whatever, you know, question that you have. But thank you guys for hanging with me through this and really going through, taking a deep dive in the different types of insurance and life insurance. And I hope that you guys got something out of this. Guys, if you got something out of it, hit the like button, please. And definitely hit the subscribe button if you haven't. I want to thank you guys who have subscribed. But guys, I want to keep getting up there on my viewers and really getting more people to subscribe. So please subscribe and check you guys out in the next video where we're going to be talking about auto insurance. So where you can save money on that. So stay tuned for the positive quote of the video and see you guys in the next video. Take care.